Bitcoin will emerge as the store of value, digital capital, and what's that worth? Hundreds of trillions of dollars is what it's worth. It's worth a lot. Why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion? $5 billion or $10 billion or any amount of money. I mean, Bitcoin, it feels like in the early days, the infinite money glitch, right? That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined.
Would you ever write a Bitcoin book?
You can see all these dominoes falling. Every quarter for the next 40 quarters, you're going to see more banks embrace Bitcoin. You're going to see more Wall Street firms. You're going to see more institutions step up. You're going to see more companies like Semler Scientific. One thing is clear, though. The robots are going to want to be paid in Bitcoin. The AIs, they can't get bank account. They're going to trade with each other in Bitcoin. It'll have a profound disruptive effect, and it's hard to calculate exactly how it changes the world, except with this one observation that I think you can make. And that observation is...
So today I'm thrilled. Sat down with Michael Saylor himself. How are you doing today?
I'm awesome. Happy to be here.
Amazing.
Bitcoin Prague.
What do you think of it?
It's an awesome gathering of Bitcoiners. I like the layout. I like the exhibit halls. It's nice to see the people. Lots of interesting things.
Speaking of interesting, public corporation adoption of Bitcoin. I'd like to jump straight into the deep end.
Okay.
So you're the first public company to take out debt to buy Bitcoin, and you've continued buying Bitcoin for the past 4 years. It's been amazing to watch. Is there a Bitcoin price or a Bitcoin market cap in the future where you might think to slow down the Bitcoin buying and invest that back into MicroStrategy?
No. Bitcoin's always going to be the best investment. It's always going to be the best idea. Bitcoin is digital capital. And so once you understand capital, capital is a store of value. It's economic energy. If I can store capital in digital form and I can move it between any of billions of computers or any of millions of companies, if I can move it at any frequency, if I can program it using the most sophisticated servers, if AIs can trade Bitcoin with each other, when 1 billion AIs are trading with each other, they're not going to be trading buildings with each other. They're not going to be trading copper tokens or gold bars. They're not going to want to trade Apple or Amazon stock with each other. They're going to want to trade digital capital with each other. They're going to want to trade Bitcoin. And Bitcoin is, because it's digital, and because it's deflationary, it's got a half-life of forever, right? It's permanent, immortal capital. So when you think of it that way, you think, well, what do I want to own? Well, I want to own perfect capital, perfect money. And if you look at it statistically, right, Bitcoin has been, for the last 4 years, it's returning 4 to 5x as much as the S&P index. And it's been 4 to 5x as volatile. And the reason it's volatile is because it's a free capital market. It's a global capital market, and anybody can express any sentiment anywhere in the world, any second of the day, as frequently as they like. And the reason it's high performance is because of its technical characteristics. So what'll happen? Over the course of 20 or 30 years, Bitcoin will start to be just twice as good as everything else. Bitcoin's 5 times as good as the next best thing right now, but maybe one day in 20 years or 30 years when Bitcoin is the size of the S&P 500, maybe it'll only be twice as good. But it's always going to be better because it's pure digital. It doesn't have the physical liabilities of physical real estate or physical property. It doesn't have the cultural liabilities of art. It doesn't have the corporate liabilities of equity. And it doesn't have the political liabilities of currency. And it doesn't have the credit risk of debt. So you're buying Bitcoin, you're buying the best thing. When should you buy something else? When something else is better, you should buy something else. But there isn't anything better. There isn't anything better now. There won't be anything better in the future. So the logical trade is you keep trading the weaker thing to buy the stronger thing. And MicroStrategy's done it with hundreds of millions of cash, with billions of dollars of equity, and with billions of dollars of debt. And we'll continue to acquire Bitcoin, and we'll sell products to get cash for Bitcoin. Maybe from time to time we'll sell some equity instrument or some security instrument. But there's no reason to ever stop that strategy, because Bitcoin's just going to continue to be the best thing. It's just a question of, is it 10 times better than the next best thing, or 5 times better, or 2 times better? But of course, those don't really matter, right? The directional answer is the same regardless.
When you frame it like that, it makes a lot of sense to buy Bitcoin forever. Now, it's interesting because it's not only Bitcoin that has outperformed the S&P 500 by 400 or 500%. It's also MicroStrategy stock. And I think this is interesting because maybe it looks like today in 2024, other public companies are beginning to figure that out, that adopting a Bitcoin treasury strategy is actually very beneficial for them. We can see a little small company in Canada, DeFi Technology, just bought $6 to $7 million of Bitcoin. We've got a tiny little Japanese company, Metaplanet, have come out and they've accumulated about $10 million worth of Bitcoin, and they've actually said they're going to take out debt in the future, tap the public markets to buy some Bitcoin. And we also have bigger companies like Semler Scientific, also recently coming out and announcing that they're going to buy, well, they did buy $40 million worth of Bitcoin, and they plan to issue $150 million of stock to buy Bitcoin. I've got a 2-part question here on this little topic that I've framed up. Are you surprised that it's taken public companies so long to begin to adopt this Bitcoin treasury strategy?
I guess I'm a little bit surprised. But yeah, because once you get Bitcoin and it clicks in your mind, your immediate reaction is, oh, I got to hurry and buy as much as I can because someone else is going to go take all my Bitcoin away from me. So like in 2020, when I started buying Bitcoin, I was thinking, oh no, I got to do this in a hurry because someone's going to figure it out and the price is going to 10x. And I better get it before it 10x's. So, I mean, that's a natural reaction when it finally clicks in your head, because you're thinking, why wouldn't every billionaire in the world go and buy $1 billion of Bitcoin, smash buy it overnight, and just to make $1 billion? Because why wouldn't they just want to make the $1 billion, or 5 billion or 10 billion or any amount of money? I mean, Bitcoin, it feels like in the early days the infinite money glitch, right? But the practical case is the world falls into conventional patterns and conventional behaviors and ceremony and ritual. And there are a lot of forces of conservatism that cause institutions and companies to move slower. So for example, in the last 4 years, one question is, will Bitcoin be embraced by the regulators? And that wasn't really clearly answered until January of 2024. So when the United States SEC approved the Bitcoin spot ETFs, that was a major endorsement that this is not tulip bulbs, this is not a scam, this is a legitimate institutional digital asset and digital commodity. So that was a very important point. Another thing that had to happen for corporate adoption is fair value accounting. If you bought $1 million of Apple stock and it doubled, you would have $1 million investment gain. But if you bought $1 million of Bitcoin under the previous indefinite intangible accounting and it doubled, you would probably be showing a loss. So a CFO that's indifferent, if they said, well, wait, I can buy this, and if it doubles, I'll make money, and if I buy that and it doubles, it'll look like I lost money. That was, I would say, prejudicial, hostile accounting. And that only just changed this year. And then the third thing that is required for institutional adoption in a big way is for the banking system of the world to start custodying Bitcoin, right? If I'm Google and I generate $1 billion a month, or maybe $1 billion a week some weeks, I have no problem wiring that money to JP Morgan or Citigroup and saying buy government T-bills, and a junior employee at Google does that wire transfer, and it's routine like this. But if I wanted to buy $1 billion of Bitcoin, I can't wire the money to JP Morgan or Goldman Sachs or Bank of America or Wells Fargo. I have to go find a new relationship. I have to set up a new vendor, right? And that, a lot of times these companies had the same bank for 20 years, 30 years. You know, now Citibank used to be National City Bank. National City Bank was the Rockefeller Bank. It was John D. Rockefeller's bank. Right? It's not unlikely that the oil companies have been doing business with the same bank for 100 years, right? So when we did it before those things. Right now, what we've seen is the ETFs have been an important green check in this process. The accounting changes have been a second green check. There's still a bit of a debate right now, a controversy in DC over whether banks should be able to custody Bitcoin, because there's a rule the SEC has called SAB 121 that prevents banks from doing it. The House of Representatives and the Senate passed a bill revoking that rule. The White House vetoed the bill. And so there's a political debate there. I think at the point that you see the mega banks in the United States start to custody Bitcoin, the third leg of the stool will be put in place. And at that point, the treasurer of Microsoft could wake up in the morning and say, I think we should buy some Bitcoin. The CFO would say, okay, well, I guess the accounting looks fine. The lawyers, the general counsel would say, oh, well, the SEC's endorsed this, and there's 34 companies that have 34 ETFs with $70 billion of Bitcoin, so I guess it's a legitimate asset. And then the treasurer could say, okay, to the person at Citibank or JP Morgan, buy us $1 billion, put down the phone. And it's just very stress-free, you see. And right now, we're not quite there. And that's the negative. It'll probably be another year or 2 years before we work through the banking issue. It's clear that it's going to happen, but it'll take a bit of time. And meanwhile, the opportunity is for these companies you named to get a leg up. And if you're the first mover, you have to do more work. It's just like someone that bought Bitcoin in 2013 had to do a lot of work. Or 2017. So you have to do more work, but you get paid. And what I used to say to people is, look, when it's not controversial and it's easy, right, everybody will want it, right? Nobody will make fun of you for buying it, but you won't be able to afford it. Right? Like you'll be able to buy 1% of what you could buy now. So when it gets easy, you'll have to pay up for the convenience of it, or you can work a bit harder right now, and the marketplace will give you a discount.
It makes a lot of sense when you frame it like that. We have two legs or two pillars of that stool, so to say.
Yeah.
We're just waiting for that third one. Now, you mentioned it, the political landscape in America. I'm surprised how quickly things are changing with the political landscape and their view of Bitcoin this year. Even last week, we had former President Donald Trump and potential future President Donald Trump come out and talk about how Bitcoin and Bitcoin mining could help defend it against CBDCs. Are you surprised at how quickly things are changing in the political landscape? And when you bought Bitcoin in 2020, did you expect we would be further along with Bitcoin acceptance in the political landscape in the US today in 2024?
I'm pleasantly surprised at the rate of Bitcoin adoption and the political acceptance. When I started in 2020, I didn't expect that we would have so much progress in the area of, say, spot ETFs. I mean, the spot ETF was a great windfall. Fair value accounting is a second windfall. The political sentiment and the drive to allow banks to custody Bitcoin is a third really pleasant surprise. The fact that that Trump has come out so positively in favor of Bitcoin is a fourth surprise, a pleasant one at that. But it's not unreasonable, right? This is the digital transformation of capital. We're going to go from 0.1% of the capital to 20% of the capital in the world, or 30% of the capital in the world digital. So it's happening. It's rational. Anyone that cares about capital markets, cares about money, cares about the economy, cares about technology should embrace it. But nevertheless, when it actually does happen, when you see the Bitcoin lobby join with the crypto lobby, join with the Wall Street lobby, join with the banking lobby, all to clamor for banks to adopt Bitcoin and custody their own keys, right? I mean, think about that. It's a really cool thing that we'll actually see Bitcoin become a settlement network and become a reserve asset for the banking system of the world. And you know, we're not quite there yet, but you can see the writing is on the wall, and the most progressive politicians are seeing that this is in the national interest.
It's interesting. All of those catalysts you mentioned are in 2024, which is really interesting when we're kind of thinking about the timelines of how things are evolving. Now, I watched a recent interview that you did on it was with Graham Stephan and his buddy. It was a great interview, great in-person interview. But you said the two biggest things happening today in 2024 was digital money and digital intelligence with AI. And you said both of those are on an S-curve adoption chart. I'm really interested to kind of pick your brains about that thesis and that comment you made in that interview, and whether that relates to the really interesting thesis you put out there at the Bitcoin Madeira conference when you said we're in this 10-year digital gold rush for Bitcoin.
Yeah, I think the years from 2024 to 2034 for digital money are the real high growth disruptive years, and the year from 2024 to 2034 for digital intelligence, probably the same thing, right? This is the decade of digital capital. And I use the word capital because money, sometimes people think, well, is that the currency, or is that the store? Is it the medium of exchange or the store of value? I would say the real disruptive change right now is Bitcoin will emerge as the store of value, digital capital, and what's that worth? Hundreds of trillions of dollars is what it's worth. It's worth a lot, and that's a very hard driving trend. You know, with regard to S curves. Normally, the year before the S-curve kicks in, everybody thinks it's not possible, right? In 1903, before the Wright brothers flew, the New York Times had front page article saying, you know, experts show why flight is impossible, will never be achieved, right? So, you know, with AI, people working on AI since I was at MIT, and you know, Apple pointed out Siri is like whatever, more than 10 years old. And yet it's, you know, the early versions of Siri and Alexa were like used to pick your playlist, you know, on your music streaming service, but not for a lot more than that. And it was really just with ChatGPT-4 that you saw this first massive commercially viable thing. They went from 0 to 100 million users in a month. It's like, and everyone that was skeptical of AI, they use that, and they're not skeptical anymore. They're like, oh, I get it. That works, right? That works. And the killer app for digital capital is these spot ETFs, you know, and they got approved in January of this year. And there are hundreds of millions of dollars a day flowing into these things. And there's $1 billion a day of trades. So imagine $350 billion a year of transactions on those ETF layers in the first year, right? So that's only going to accelerate. And I think that, that with regard to, the spot ETFs, they catalyzed corporate and institutional adoption of digital money. And you see, examples like BlackRock has days when they buy hundreds of millions of dollars of Bitcoin. You see institutional hedge funds hold $1 billion or $2 billion worth of Bitcoin via these ETFs. And you see, pension funds, the Wisconsin Pension Fund allocates $170 billion or something like that to buy Bitcoin. And then they go, oh yeah, that's 0.1%. We need it to be 1% to move the needle. So we dip our toe in the water, but you realize now institutions, corporations are moving in size that is order of magnitude and 2 orders of magnitude greater than was going on before. That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined. So right now is the time when you've got natural sellers. You've got 450 Bitcoin available a day to buy from someone that might want to sell it to you, right? And when that supply gets cut off, the only way you're going to get Bitcoin is to take the price up and get it from an unwilling seller by bribing them with a high price increase. So this is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil. In fact, the largest bank in South America is Banco Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. Well, that's what happened in Brazil, right? So you can see all these dominoes falling. Every quarter for the next 40 quarters, you're going to see more banks embrace Bitcoin. You're going to see more Wall Street firms. You're going to see more institutions step up. You're going to see more companies like Semler Scientific. You're going to see, I mean, this week, MicroStrategy went out to raise a bond offering, and we started at 500 million, and then we just upped it to 700 million. So in one day, we increased our capital financing by $200 million in a day, right? And we're going to go raise $700 million and buy Bitcoin with it. And so these are major chunks of capital that are moving, and they're flowing from the analog to the digital, from the 20th century to the 21st century, from the traditional to the progressive capital market. If you look at that same trend in digital intelligence, it's pretty clear everybody's going to start using some AI tool. Microsoft is going to bundle in some AI tool like Copilot, and pretty soon every white-collar worker with Microsoft Office is going to be using some kind of AI Copilot of some sort. It's going to spread like wildfire to 1 billion people, and then pretty much every white-collar worker will have to have it. And from there, it's, the first step will be every white-collar worker uses it. The next step will be it gets embedded in every product. Like it's being embedded in Adobe, it's embedded in the graphic design tools and the writing tools and the math tools, etc. The next step will be your car will drive itself. It'll be embedded in a physical product. Then it will be embedded into robots. It'll be embedded into factories. It'll have a profound disruptive effect, and it's hard to calculate exactly how it changes the world, except with this one observation that I think you can make. And that observation is digital intelligence is going to do a lot of work. It's going to do a lot of work that humans used to have to do. So if you have an economy and you have 10,000 workers, and then you have capital equal to 10,000 workers, when I introduce a robot that does 10,000 person years of work for free, then the value of that labor is going to go down. The value of the capital is going to go up. And so my advice to anybody looking at AI is you better buy Bitcoin. Right? If you're a taxi cab driver, the car will drive itself and you're going to be living off your Bitcoin. Right? Whatever you're doing, if you're getting automated, and who isn't getting automated, right? What task isn't getting automated by AI, right? Some portion of it is going to be automated away. As that happens, certainly you should try to rebuild your product or your service to make it better with AI. But the value of pure digital capital is going to be relatively greater because if you have the capital, you can hire 10,000 AIs to do the work with the capital in a split second. MicroStrategy, well, we had a lot of capital. We had 2,000 employees. And for 2,000 employees, you have to have a payroll of 300 million a year or more. Okay? What if you could actually have 2,000 AI employees, but the payroll wasn't 300 million a year, it was 300,000 a year? Well, stuff is going to change. One thing is clear, though. The robots are going to want to be paid in Bitcoin. The AIs, they can't get bank account. They're going to trade with each other in Bitcoin, right? If you're digital intelligence, you're going to want to be capitalized with digital capital. So all of these trends are good for Bitcoin, right? They're disruptive to the world. If you make a living with analog capital, right, and you trade analog assets based on their monetary premium, then your business and your profession is going to be disrupted. And what you want to do is find a way to get to the digital economy. And if you make a living by, doing things that robots, factories, and AIs can do, you want to get yourself to the digital economy or get on top of that or ahead of that before it arrives.
I think this transition from the analog world to the digital world is going to be a fascinating transition to watch play out. Now, you've actually been writing about this for a very long time. In your book that you put out in 2013, The Mobile Wave, you're talking about how the internet, computers, and software were going to change the world. Have you ever given a thought to writing a Bitcoin book now that you've done hundreds of interviews in the Bitcoin space? Would you ever write a Bitcoin book?
I might write a Bitcoin book, but I think there are a lot of really good Bitcoin books already written. I mean, I think The Bitcoin Standard is a great book. I think Broken Money is a great book. I think The Bullish Case for Bitcoin is a great book. I think Resistance Money is a great book. I could go on. Hard Money You Can't F With, the little Bitcoin book. And so I highly recommend all of those. And we actually have a lot of those books posted on my website, hope.com. My view right now is I want to make sure that I'm producing as much educational content and advocacy as I can in whatever form people consume it in. So people watch YouTube videos. I have a 4-hour video with Lex Friedman. It's been seen about 9.5 million times. And then I worry, a lot of people don't have 4 hours, so maybe I better do 40 minutes. And then I think, a lot of people don't have 40 minutes, maybe I better do 4 minutes. And then I think, a lot of people don't have 4 minutes, maybe I better do 30 seconds. And then sometimes I think they don't have that time, I'll just post a picture in 10 seconds. And then I'll write a 1-sentence caption and I start thinking, I don't know if they're going to read the entire sentence. I wonder if we can cut this back. So we live in a world where we got to get to 8 billion people. And we got to get to 8 billion people, and we're competing with TikTok and Instagram and X, and we're competing with YouTube. And books are one avenue, and I love it. But Broken Money came out. It's a great book. But then Lynn Alden created a 30-minute video, which was an awesome video. And I posted that video, and I thought there are a lot of people who won't read the book, but they'll watch the video. So I never say never, but right now I feel like my role is to stay atop of regulatory developments, like read the 484 pages of the Fit 21 legislation going through Congress and figure out what impact it has on Bitcoin. So I want to stay atop of that, and that requires a lot of continual research, listening to congressional testimony, studying every piece of legislation, every legal action, digging into all the Bitcoin protocol debates, right? So, speed listening to every Bitcoin podcast that goes across Stefan Livera or Peter McCormick. There's a lot of that to be done. And then I've got a lot of work to synthesize and figure out how to communicate that to people. And then there's the Bitcoin for Corporations work, and then there's the MicroStrategy capital markets work, and what are we going to do at MicroStrategy, and how do we find a way to get some more Bitcoin? What's the next Bitcoin purchase for us, and where is it coming? And then make time to speak to CEOs and boards of directors and investors of other publicly traded companies. So there's thousands of companies on the public market, and they have bad capital structures, and they need to recapitalize with Bitcoin. But oftentimes there's a question of, how do I convince my board? How do I convince my investors? How did you do this? I'll go, the accounting standards have changed, and the CEO goes, oh, no, I didn't know that. That's great. Show me that. Or where can I buy Bitcoin? Can you hook me up with the right institutional, exchange or custodian? So there's a lot of work to be done there. And, if I took a year and wrote the book and I put it out there and 1% of the people read the book and it took 10 hours to read the book and figure it out, well, there's something, but on the other hand, I'm interested in making it as easy as possible, right? And everybody comes to Bitcoin their own way. So I will look for the best content and do my best to curate it, promote it, and bring it to people's attention as I can.
The only thing as scarce as Bitcoin is time. So I understand that answer. It's a great answer. Now, I want to try to remember a quote from your book. I'm going to try my best to paraphrase it. So I think you say something along the lines of Gutenberg and his printing press created a galaxy of information. The internet created a universe of information. I believe that the Gutenberg printing press and the internet, two of the most formative inventions that our civilization has discovered, invented, created. How do you see or rank Satoshi Nakamoto's invention against those two?
The Gutenberg printing press, it dramatically decreased the cost of sharing information. It allowed us to capture thoughts and to convey thoughts. So capture intelligence and convey intelligence via the book. And, the people that drove, the Reformation, the scientific revolution, the Voltaires. If you look at what Voltaire wrote, fills up an entire shelf, right? So without the printing press and that technology, we never could have had the great ideas and the great thinkers. The internet drove the digital transformation of information, right? And the digital transformation of information is profound, and it drove 30 years of economic expansion, the internet revolution, and it created Microsoft and Apple and Amazon and Meta and Google and this big tech revolution. But where Satoshi figures into this is Satoshi introduced the digital transformation of energy. Information is non-conservative. energy is conservative. Satoshi introduced conservation of energy into cyberspace. And if we think about the things that are information based, the book, the course, the movie, the picture, the message, the relationship, music, right? All of these things are information, and they were profound because when you could spread information in the non-conservative way at the speed of light, at the cost of electricity, you could give the average person 50 million songs in their pocket. And you could give them the entire Library of Congress in their hand. And you could give them 100,000 or 1,000,000 hours of education for free on their computer. And so that was a massive dematerialization of the physical world. The entire 20th century information economy dematerialized because of the breakthrough of the web and TCP/IP. But there's a whole class of things in the civilization that are energy-based. Matter, property, money, capital, and pure energy itself. And what Satoshi did was provide us with a way to send something of value from person A to person B without a trusted intermediary. And oftentimes people describe Bitcoin that way. It was the ability to do a transaction of value, to transfer value through space without a trusted intermediary. But that so understates the significance of what really happened here. What really happened is Satoshi manifested something of value in cyberspace without a trusted intermediary. And that something of value is energy, because you could transfer it. When you transfer Beethoven's Seventh Symphony, the person that sent it to you still has a copy. And you can both listen to it without a degradation in the experience of the other person. So transferring information through space is non-conservative. You could transfer 8 billion copies of Beethoven's Seventh Symphony and you wouldn't lose the copy. It's impossible to transfer energy in a non-conservative way, right? The laws of thermodynamics say it's impossible. Energy can't be created or destroyed. You can only transform the form. If I'm going to give energy to you, I have to give it up, right? And we call this solving the double spin problem. But again, it's such a lowbrow colloquial way to say it. We solved the double spin problem. It's like, oh, we implemented the laws of thermodynamics in the digital realm. A much deeper idea. I figured out how to create an internet with conservation of energy in it, right? What that means is Satoshi introduced form, matter, and energy into cyberspace, made it possible for us to manifest digital capital, digital money, made it possible to therefore create something of substance, energy substance, that took energy to create, that could be used to convert back into physical energy, and made it possible to not just transfer it to anybody without an intermediary, but also made it possible to transfer it in time as far forward as you want. So manifesting energy and moving it through time and space without a trusted intermediary means we created pure digital energy. Now we're in a 30-year revolution, the digital energy revolution. Every application that you can imagine that requires energy content can now be created by a computer in cyberspace. What that means is now we have the realm, the age of digital money. J.P. Morgan said gold is money, everything else is credit. And what he meant was if I own the gold, I have the asset, and if I have a piece of paper, I've got an IOU. And the entire world, the financial world in cyberspace, ran on digital credit for the last 30 years. So everything of consequence is digital credit. There was no digital money. Okay, the credit's defective. The credit is too slow. It's crumbling. It's toxic. And so everything that you build in cyberspace was plagued with toxicity and defects. All these systems are defective. Like, why do we have phishing attacks and scams and cyber insecurity? It's because of the lack of digital money and digital energy. We have digital credit. So Satoshi introduced something which is profound. If you want to build a true digital world, you have to have digital money. Like, for example, I could create a wall in cyberspace where I say, you want to come into my space, you have to post $50. You give me the $50, you get in. When you leave, I give you the $50 back. Okay. That application in a world of digital credit isn't possible because the $50 credit card transaction might cost $1. And then it costs another $1 to give you the money back. So it costs $2 every time you cross the frontier, and now you want to cross the frontier 10,000 times a minute. Huh? You can't do it. You can't vibrate money 10,000 times a minute when it costs 2% or 4% of the money every time it vibrates once. Too expensive. But the other reason it won't work is because it takes 30 days to settle the credit. So you want to come into my zone and leave in 1 second, but it takes 30 days. So, okay, you gave me your deposit, wait 30 days and you can enter. Well, wait a minute. You know, my business with you won't be here in 30 days. So you cannot move the money with the frequency. You can't vibrate the money, and you don't have enough efficiency for the wave to ripple through the digital economy in a world of digital credit. So the result is people don't charge the deposit. And the result is you can send 87 million spam bots into my digital world and corrupt and destroy my information because there is no digital monetary barrier. So, you know, Satoshi ushered in the age of digital energy. Applications built with digital energy will be 10 times more valuable than applications built with digital information, right? How do you build a castle in cyberspace? How do you build a wall that takes $1 billion to get through in cyberspace without $1 billion of real energy? How do you move $1 billion a second in cyberspace? How do you move $1 billion at 1,000 times a second back and forth in cyberspace? You need something digital. You can't do it with credit. So I think we should be grateful to Satoshi. What Satoshi delivered is a revolution in economics. It will revolutionize economics and make it a science. It'll actually convert economics from an art to a science. But what Satoshi did was introduce consequence, the laws of physics, to computer science. And I would argue that computer science, they call themselves scientists, but they're also artists. And it's only with the advent of digital energy that computer science becomes a true science and an engineering discipline, because now you can introduce into software design energy consequences and thermodynamic consequences. So the software created in the next age will be much greater with integrity and substance and form. And the economics done in the coming era will have integrity and consequence.
That's a great answer. Satoshi has created a portal into cyberspace. Now, I've got one last special question for you, Michael. But before we get there, I want to ask you a couple of rapid fire ones. What are the 3 most recommended books that you recommend people?
I would say read The Story of Civilization, Will Durant. It's kind of cheating because it's like 11 books. It's a lot of books. But it's the story of civilization, and it covers a lot of topics, but you can at least consider yourself with a decent familiarity with the events of history. So I would read that book. Second book that I would recommend. I think it's something like The History of Economic Thought from an Austrian Perspective by Rothbard. You know, a history of economics specifically, right? As opposed to just the general artistic, political, scientific, and military history of the world. I would read a History of Economic Thought as a second book. And I suppose the third book has got to be The Bitcoin Standard.
Great recommendations.
Yeah.
Now, you can give me a top 3 for this one if you don't want to land yourself in hot water. But do you have a favorite Bitcoin conference, or what are your top 3 favorite Bitcoin conferences?
My favorite Bitcoin conferences. Well, I guess I got to say BTC Prague is.
Yeah.
The wall will eat me.
Yeah.
I BTC Prague.
Yeah.
And I like the Bitcoin conference.
Yep.
You know, it's been in Miami. I like it in Miami because it's near my house.
Yep.
But I guess I'd like it in Nashville too. And for my third Bitcoin conference, I guess I have to go with Pacific Bitcoin because I gotta give California some love.
Yeah, it's a great list. It's a great list. Now, final special question. Last year, here at BTC Prague, after an interview you did with Bitcoin News, a friend of mine, Max DeMarco, asked you a question that I have never seen you think so much about before answering. I think the question from memory was something like, what is the question that you've never been asked that you wish that you had been asked? Do you remember your answer to that question?
It's no fair. People keep asking me that question, but I, if they keep asking me that question, I have to throw off the previous answer off the list.
Well, I'm not asking you the question again. I'm actually giving you the opportunity to ask the world that same question. What is the question that you wish more people would ask themselves? Or is there just a final thought that you have for the viewer today that we didn't touch on?
I think that the fundamental question everybody should ask themselves is, what is money?
I think that's a beautiful note to end it on. Michael, thank you so much for your time.
Been a pleasure.
So if you made it to the end of our interview with Michael Saylor today, we wanted to leave you guys with 3 final thoughts. The first is actually a thank you. We wanted to thank every single one of the 6,212 of you guys who are subscribed to our channel. It is through your continued support that gives us the opportunity at Bitcoin News to travel to different conferences and even interview people like Michael Saylor. So we really wanted to say thank you. And as a little bit of a way to give back, we wanted to ask you guys who you want us to interview next. We are headed to Bitcoin Nashville literally this week, and we are actually planning on filming a lot of interviews during our time in Nashville. So if you want us to interview someone in particular while we are there, jump on over to Twitter, find this tweet here that is linked down below in the description, and tag who you would like us to interview and why. You can even leave a question in your comment as well if you would like us to ask them that specific question. But again, we want to give you guys as much value as we can. So let us know who you would like us to interview next. And the second thing we wanted to remind you about is this is a big week. We have interviews coming up with Tom Luongo and the next potential leader of Suriname, who is a Bitcoin advocate. So stay tuned. If you're not subscribed, you probably are going to miss those interviews. And we do know that 75.6% of you guys watching these videos are not actually subscribed to our channel. So make sure you subscribe, hit that little bell notification so you're notified when the next big interview drops on this channel. And with all that said, the final thing we wanted to say, thank you to everyone who supported this YouTube channel this year in 2024. Thank you to our show sponsors, Neutron Pay and Rhino Bitcoin. And stay tuned, we have a number of big interviews coming. While you wait for those ones, you can click on the links right about here from our recent interviews with Samson Mow and Preston Pysh. Enjoy the rest of your day.